Let me ask you something, and be brutally honest with yourself. Are you one bad trading week away from financial ruin? Do you lie awake at night, heart-pounding, terrified that the next market move could wipe out months, even years of your hard work? If that hits close to home, you need to hear this, because today I'm not going to sell you a magic indicator or a guaranteed win strategy. I'm going to give you the key that separates the 10% who build lasting wealth in the U.S. markets from the 90% who crash and burn. It's the one thing I wish I truly understood when I first started the lesson I learned through painful losses. This is the golden rule of capital management. Ignore it at your peril. Remember your first taste of trading, that intoxicating rush when you picked a winner. Suddenly you felt like a Wall Street prodigy, right? I've been there. My first few wins, I thought I was invincible. I started increasing my position sizes, dreaming of doubling, tripling my account in weeks. And then bam, one sharp market correction, one unexpected news event, and over half of my hard-earned savings vanished. Poof, gone. Sound familiar? Have you ever felt that gut-wrenching drop, that feeling of your stomach hitting the floor as you watch your capital evaporate because you got greedy or reckless? That's when the most painful yet most valuable lesson began to sink in. Big wins don't matter if you don't survive to trade another day. To survive to truly build wealth in this game, you must master capital management. So ask yourself this: if the market tanks 30% next week, and believe me, it can, is your financial house built of brick, or are you still playing with a house of cards wearing paper armor in a battlefield of steel? Let's dismantle that paper armor piece by piece and forge you something real. All right, let's talk about the cornerstone of survival, the 1% to 2% rule. Imagine you have a $10,000 account. It feels substantial, right? Full of potential. But with that potential comes risk. How do you protect it? By applying this golden rule, never risk more than 1% to 2% of your account on any single trade. That means with a $10,000 account, your maximum acceptable loss per trade is $100 to $200. Stop and think about that. If you lose one trade, you're down 1%. Annoying, yes, but recoverable. Lose two, still only 2%. Even if you hit a brutal losing streak, 10 consecutive losses, which happens to everyone, you've only lost $1,000 to $2,000. Your account is still 80–90% intact. You have ammunition left. You have the psychological capital to keep going. Do you feel the power in that kind of control? Now let's flip it. Imagine you're betting 10% per trade because you're impatient, you want to get rich quick. One loss, $1,000 gone. 5 consecutive losses, and they can come faster than you think, and half your account is gone. $5,000 vaporized. Be honest, how would your mind handle that? Would you be calm, analytical, or would you spiral into panic revenge trading and blow up the rest? I had a friend, let's call him Mike, super smart guy, new to trading. He had a phenomenal first 2 weeks, turned $5,000 into $10,000. He thought he'd found the Holy Grail. Then he heard a hot tip about a stock. He went all in, $10,000 on one trade. That same day, an unexpected market event hit. Within hours, Mike's entire account was wiped out. Gone. Do you think destroying all that progress in a single trade was worth it? If you were Mike, what would you have done differently? Think about it. The 1–2% rule isn't about getting rich overnight. It's your fortress. It's the wall that protects you from those sudden devastating market storms. It gives you the right to be wrong multiple times and still stay in the game. Remember, in trading, controlling your losses is far more critical than chasing profits. Everyone loses. The successful ones are those who limit the damage. So are you truly applying this rule, Or are you still gambling with oversized bets, hoping for that one lucky break? If the answer is not really, don't beat yourself up. Today is always the best day to change. Small, disciplined steps. That's how you build a sustainable trading career. Your trading account is like a car on a long journey. You wouldn't redline the engine on every single stretch of road, would you? Sometimes you need to ease off, control your speed, and ensure the engine doesn't blow. Trading is no different. And finally, remember this: a great trader isn't someone who never loses. A great trader is someone who knows how to lose correctly and survives long enough to win. Will you choose to be a seasoned warrior built for the long haul, or a shooting star that burns bright and then vanishes? The choice is yours. If this is hitting home, if you feel that aha moment, do me a favor and hit that like button. Let's spread this crucial wisdom. And if you know someone who needs to hear this, share it. You might just save them from a very expensive lesson. Thank you. Okay, we've laid the foundation with the 1-2% rule. But what good is a fortress if you leave the gates wide open? That's where discipline comes in. Specifically maintaining ironclad discipline, especially after a string of wins or a string of losses. Have you ever made a solid plan, promised yourself you'd stick to that 1% risk, only to break that rule after a few wins? We've all been there. You win a few, confidence soars, and you think, I've got this. Let me just bump it up to 3%, 5%. What's the harm? I'm on a hot streak. But the real question is, what if you lose? Imagine walking a rickety rope bridge. Careful steps get you across, but if you start showboating, get cocky, one misstep sends you plunging into the abyss. Breaking your capital management discipline is exactly like that. Early in my career, I fell into this exact trap. 4 wins in a row, profits piling up. I felt like the king of the market. I thought, if I double my size, I'll double my profits. And what happened? The next trade was a loser. The loss was twice as big as it should have been. I tried to win it back by trading even larger. And just like that, I was sucked into a vortex of over-trading, revenge trading, losing everything I'd just made and then some. Have you ever felt that sickening lurch? It's not just the money, it's the crushing self-disappointment. You had a winning hand, and you threw it away through lack of discipline. So back to our golden rule. What is effective capital management? It's not just about small risk per trade. It's about absolute discipline, especially when your emotions are running high, after big wins or painful losses. Why is it so easy to lose discipline after a win euphoria? Your mind tricks you into thinking you're infallible. You forget that the market operates on probabilities, not your feelings. And after a loss, pain and frustration, you want to recoup, quickly prove you were right. That's when you're most vulnerable to reckless decisions. Let me tell you about another trader I knew, extremely disciplined for 3 solid months. 1% risk per trade. His $10,000 account grew to $15,000. Then one piece of unexpected bad news cost him $1,000 in a single day. Instead of accepting the loss and stepping back, he became obsessed with getting it back. The next 2 days he doubled, then tripled his usual position size. The result? From $14,000, his account plummeted to $8,000 in 1 week. Does that sound chillingly familiar? How many times in your life, not just in trading, have you broken your own rules because you couldn't manage a fleeting emotion? When we lose discipline, even the most brilliant strategies become worthless. So how do you forge this unbreakable vow? 1. Write down your rules. Post them where you trade. Read them daily. Remind yourself, I'm here to make money consistently, not to prove anything. 2. Set a daily or weekly loss limit. For example, if you lose 2 trades in a row or a certain percentage of your capital for the day, stop. Walk away. Let your emotions reset. 3. Have a clear plan before you enter any trade. Entry point, stop loss profit target, and do not change it mid-trade based on emotion. 4. Understand that losses are normal. Don't panic when you lose. Don't get euphoric when you win. Treat trading as a long-term game of probabilities. 5. Keep a trading journal. Every trade, every emotion, every lesson. It's the most honest mirror reflecting your progress. Are you doing any of these? If not, are you ready to start today? Remember, success in trading doesn't come from one dazzling win. It comes from hundreds, thousands of disciplined actions, repeated day in, day out. If you stay disciplined long enough, success isn't a matter of if, but when. Are you ready to build your fortress of discipline starting now? Have you ever had a string of losing trades? Ever wondered why, even with careful analysis and precise entries, you still end up in the red? Here's a hard truth. Trading is not a game of certainty. It's a game of probabilities. And in that game, you will encounter losing streaks, even when you're doing everything right. The real question isn't, how do I avoid losses? The real question is, how will I react when I lose? When I first started, I thought losses meant I was stupid, that I was wrong. Each loss felt like a personal insult. I'd blame the market, the news, my broker, the software, anything but my own reaction. Are you doing that now? It was only by learning from truly successful veteran traders that I understood losses are an inevitable, integral part of this journey. No one, and I mean no one, only wins. Even trading legends like Paul Tudor Jones, George Soros, or Jesse Livermore had periods of significant losses. So losing 1, 2, or even 10 trades in a row doesn't make you a bad trader. It just means the probabilities weren't in your favor at that specific moment. The biggest danger isn't the loss itself. It's letting that loss hijack your emotions. When you lose, you'll feel pain. That's natural. But how you choose to respond to that pain defines who you become in the trading world. Remember our golden rule. It's about accepting losses as part of the game while managing risk so that no single loss or string of losses takes you out of the fight. Imagine you're rowing across a turbulent river. Each wave against you is a losing trade. If your boat is sturdy, your well-managed account, you'll push through. If your boat is flimsy, poor risk management, each wave threatens to capsize you. If you're risking only 1 to 2% per trade, even 10 consecutive losses leave you with 80–90% of your capital. You're still in the boat, paddle in hand, ready for the favorable currents, but risk 10% per trade. 5 losses and half your boat is underwater. How calm will you be then? Will you wait for good opportunities, or will you start bailing water frantically and aimlessly with a sieve? A colleague once shared a heartbreaking story. He had a $50,000 account. Initially very disciplined, 2% risk. His account grew to $60,000. Then a string of unexpected news events led to 5 consecutive losses, about $6,000 down. Now is $6,000 on a $60,000 account terrifying? No, it's manageable, about 10%. But the problem was he couldn't stand the feeling of losing. Instead of pausing, reassessing, he decided to win it back fast. He tripled his position sizes. The result? In 2 more days, he lost another $12,000. His account tanked from nearly $60,000 to just over $40,000. But the worst part, his psychology was shattered. He lost faith in himself, lost patience, and eventually quit the market bitter and broken. Do you see a piece of yourself in that story? How are you mentally preparing for losing streaks? Are you ready to view losses as tuition paid to the market? Have you built a capital management system to survive those inevitable storms? Remember, success in trading doesn't come from avoiding losses. It comes from surviving long enough to capitalize when the probabilities do shift in your favor. Trading is a marathon of endurance, of accepting rainy days while waiting for the sun to break through. Are you prepared for those rainy days? If you're still listening, allow me to offer my sincere gratitude. Truly. Not everyone has the patience to go this deep. Most people out there are just chasing winning strategies, magic formulas, secrets to beat the market. But very few are willing to sit down and truly learn the deceptively simple yet profoundly crucial lesson of how to survive. In my journey, I've seen it all. People walking in with hundreds of thousands of dollars full of confidence, betting 20–30% of their account on a single trade. A few bad moves and that capital evaporates faster than you can blink. And I've seen others starting with just $10,000 who are incredibly patient, risking only 1% per trade, always sticking to their discipline. Even after 10 straight losses, their account is still over 90% intact. They stand firm, wait for the next opportunity, and eventually they find success. Which group do you want to be in? If you unexpectedly lost 10 trades in a row, starting tomorrow, what would happen to you? Would your account survive, or would it be wiped out? Would you stay calm and course correct, or would you spiral into revenge trading? Stop for a moment and answer those questions honestly, because how you answer will define your trading future. Capital management won't make you rich overnight. It won't turn you into a trading genius instantly. It might not even feel exciting. But what capital management will do is ensure you have money left to keep playing, to keep learning, to keep correcting your mistakes, and to keep growing. There's a saying I love: the market can stay irrational longer than you can stay solvent. If you don't know how to manage your capital, the ultimate winner isn't the smartest person, nor the one with the best strategy. It's the most resilient one. The one who knows how to endure, how to defend, how to survive the worst of times. Are you building that kind of sustainable foundation for yourself? By now, you've probably pieced together the answer to the question I've been weaving through this entire discussion. What is the golden rule of effective capital management in investing? It is limiting your risk on each trade to a psychologically manageable level, like 1–2%. Accepting losses as a natural part of the process and having the discipline to survive long enough for the probabilities to work in your favor. Simple to say, incredibly challenging to practice. It demands you conquer not the market, but yourself. Your greed, your fear, your impatience to win back losses or to get rich quick. But I believe if you're here listening to these words, you're already different. You've taken a massive step. You don't just want to win, you want to survive and thrive. And that, my friends, is the most solid foundation for any long-term success. Thank you from the bottom of my heart for joining me on this deep dive. Thank you for your patience, for reflecting, and for being open to change. Keep that fire for learning alive, that spirit of resilience. The road ahead is long filled with incredible lessons waiting to be discovered, and I and the Mind of a Trader community want to walk it with you. We are your companions on this journey. So if this resonated, if you found value, please give this video a thumbs up. It tells YouTube to share this with others who need it. Most importantly, I want to hear from you. Comment below. What is the one capital management rule you struggle with the most? Or what's the biggest aha moment you got from this video? Let's create a powerful discussion. Your story could be the catalyst for someone else's breakthrough. And of course, if you haven't already, hit that subscribe button and the notification bell for Mind of a Trader. We're committed to bringing you more practical, no-fluff content designed to make you a smarter, stronger, and ultimately a more profitable trader. The journey doesn't end here. It's just beginning. Let's continue to learn and grow together. I'll see you in the next video. Until then, stay disciplined, build that solid foundation, and may your trades be ever in your favor.